Hello students, good morning. So we'll continue with the online class, that is we are solving practical problems on accounting from incomplete records, and we completed 7 problems I think. So we'll just move on with the next 24 marks problem. Okay, you please take down this problem. You just copy down this. That is illustration number 8. Okay, so illustration number 8, that is the books of Pranith show the following figures. They have given the opening and the closing balance of some of the assets and liabilities, but at debtors and creditors only closing balance is given, not the opening balance. Means you have to prepare debtors and creditors account to find out the opening balance, and you have to prepare cash account. Though the opening and closing balance of cash is given, but they given some of the transactions that is relating to cash. You see the secondary information like the cash book show the following figures. Means these are all included in the cash account. Okay, now you have to prepare cash account also. So you have to prepare cash account, you have to prepare debtors account, you have to prepare creditors account. Okay, now first we'll discuss the problem. So cash account opening closing is given, but you have to prepare the cash account. Stock opening and closing is given, so we need not prepare the stock account. That the opening balance, that is nothing but opening stock. Closing balance is nothing but closing stock. Debtor ka opening balance is not given, closing balance is given, so you have to prepare the debtors account. Creditor opening is not given, closing is given, means you have to prepare the closing opening. You have to prepare the creditors account, and you have to find out the opening balance. Sundry asset opening and closing, it did not change it. It is 3000 each, so no need of preparing the ledger account. So the cash book show the following figures. Received from debtors. What is the journal entry? If you take down the journal entry first. First you write down the journal entry, then I will tell whether it is right or wrong. First yourself you write the journal entries for receipt from debtors. So the journal entry will be cash account debit to debtors account. So journal entry will be cash account debit to debtors account. You see the second and the last point. These two are different, right? Quite different when we see, when we compare with the other problem. One, private dividend paid in. So listen carefully. It is private dividend paid in. There are two terms, that is one private dividend paid out, one private dividend paid in. Now private dividend means it is the Pranit, it is paid in means he introduced or he invested his private dividend in business. In means he is paying in. Private dividend paid out means it is the private dividend of Pranit paid out of business. That way you have to treat. So I repeat, private dividend paid in means is private dividend is investing in the business. Paid in, it is coming in to the business. Private dividend paid out means is the private dividend is paid out of business cash. Now what is the treatment? Private dividend paid in means it is nothing but additional capital, because anything you introduce, anything you invest into the company, then that is your capital. ನೀವು ಯಾವುದನ್ನೇ ಬೇಕಾದರೂ ಕಂಪನಿಗೆ ತಂದು ಕೊಟ್ಟರು ಸಹ ಅದು ನಿಮ್ಮ ಕ್ಯಾಪಿಟಲ್, ಬಿಕಾಸ್ ದಟ್ ಈಸ್ ದ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಡನ್ ಬೈ ದ ಪರ್ಸನ್. If you give 1 lakh to the company, then that is capital. If your personal asset is given to the company, again that is also treated as capital. If you bring goods, then that is your capital, because you are bringing. It is not the company purchasing, but something that is given by the owners or the partners. So private dividend paid in means is private dividend. Pranit ka private dividend means its own money. It's the money of the Pranit. He is receiving the dividend, but he is investing in the company, paid in. So that is treated as additional capital. So the journal entry will be cash account to debit to capital account, because cash comes in. So cash account to debit to capital account, to capital account. Okay, that is private dividend paid in. If it is private dividend paid out means is a private dividend paid out of business. It is nothing but drawings. Anything that you take from the company for your personal or private purpose, then that is drawings. Okay, that should be treated as drawing. But here it is private dividend paid in, so it is nothing but investment. That is nothing but is introducing the capital, so treated as capital. So the journal entry is cash account debit to capital account. Next, indirect expenses. Now indirect expenses, what is the journal entry? Expense means you have to pay, the cash goes out. So indirect expenses account to debit to cash account. Indirect expenses account to debit to cash account. So indirect expenses, that is P&L item. Direct expenses, everything will go to the trading item. Why it is known as direct and indirect means if the any expenses that is directly connected with the your objective of the business. Objective of the business means if your business is to manufacture the goods, then any expenses that is directly connected with the manufacture, then that is direct expenses, that is taken in the trading account. Or your main objective is to trade the goods, buying and selling. You buy from one person and you sell it to the other person, that is if your business, Then any expenses that is incurred directly on the trading purpose, then that is direct expenses, then that will go to the trading account. So anything that is directly connected with the your objective of the business, ಅಂದ್ರೆ ನಿಮ್ಮ ಮೇನ್ ಬಿಸ್ನೆಸ್ ಯಾವುದು ಅಂತ ನೀವು ಫಸ್ಟ್ ಐಡೆಂಟಿಫೈ ಮಾಡಿ, ಅದಕ್ಕೆ ಡೈರೆಕ್ಟ್ ಆಗಿ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಕನೆಕ್ಟ್ ಆದ್ರೆ ಎಲ್ಲ ಟ್ರೇಡಿಂಗ್ ಹೋಗ್ಬೇಕು. ದ ಅದರ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್, ದ ರಿಮೈನಿಂಗ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಇಸ್ ಟ್ರೀಟೆಡ್ as indirect expenses, that everything will go to the P&L account. Why P&L? Because you incur that expenses, you have to show it in your books of account, so you show it in the P&L account. Drawings, again cash goes out, so drawings account debit to cash, drawing should be deducted from capital. Payment to creditors, again this is the repetition, creditors account debit to cash. Now this is something new. Discount allowed by them. Now who is them? Them means the other person, the person who is next to you. So if you are allowing the discount, then they won't use the word them, correct? Or you them ಅಂತ use ಮಾಡೋದಿಲ್ಲ word. So it is the other person who is allowing the discount. Now who is the other person? The other person, the only person who can allow the discount on the company, then he is the creditor. Okay, so creditor is allowing the discount. This is allowed by creditor. You are not allowing the discount, it is allowed by creditor, because it is allowed by them, the other person is allowing the discount. ನಿಮ್ಗೆ ಯಾರಾದ್ರೂ ಡಿಸ್ಕೌಂಟ್ ಅಲೌ ಮಾಡೋದಾದ್ರೆ ಅದು ಕ್ರೆಡಿಟರೇ ಆಗಿರಬೇಕು. If you are allowing the discount, then that is discount allowed. But though it is termed as discount allowed, you don't take it in the debtors account, because it is not allowed by the company. This is allowed by the other person, by them, other person. So if they are allowing the discount to you, then that is discount received, and it is not discount allowed. So read the question carefully. It is if they give just a discount allowed, then you can take it in the debtor account because you are allowing the discount. Then you can take it in the P&L account as a debit side because that is an expenses. But here it is discount allowed by them, so you underline the word them. Okay, when it is allowed by them means you are the beneficiary, new benefit receive ಮಾಡುವವರು, because they will allow the discount on you. So the journal entry, journal entry means it will move to the creditor account because they have to allow the discount, right? So it is creditors account debit to discount allowed, means you have to take it to the creditors account, and you have to credit to the P&L account because it is discount received. Okay, so I'm repeating the same point. Please note, it is not a discount allowed, it is discount received. But in the problem they given it as discount allowed by them. In question change ಮಾಡ್ಲಿಕ್ಕೆ ಹೋಗಬೇಡಿ. Actually the problem is correct, but what is the treatment of that? It is discount allowed by them. Them means the other person is allowing the discount, so you are the receiver of the discount, so it is discount received. Okay, so this is the items they are given with some additional information. The first one, cost of goods sold during the year 1,05,300. Now what is cost of goods sold? How we will get that? So cost of goods sold means the cost to incur to sell the goods, or cost you incur. Yeah, it is the cost of goods sold. How much units of goods you sold, on that what cost you incur, that is what cost of goods sold. So there is a one format, there is one formula for cost of goods sold that in detail we'll see in the next slide. Okay, now I'm skipping that point number 1 as well as point number 2, because point number 2 we need to calculate the sale value, that is 1 and 2 are connected, that we'll discuss later. Okay, when we solve the problem. We'll move to the third point, bad debt written off during the year. So bad debt, again debtors account you have to take, and you have to debit it to the P&L account because that is your expenses. And past bad debt recovered. You are recovering the bad debt, means you are recovering the cash. So what is the journal entry? It is cash account debit to bad debt account because it is a recovered, you are receiving. So cash account debit to bad debt recovered account. Bad debt will be taken in the debtor account, but bad debt recover is not taken in the debtor account. So in the first or second problem, I told you, I made it very clear. Only bad debt will appear in the trading debtors account. Any provision or reserve, any bad debts recovered will not come in your debtors account, but all the provisions, all the bad debt, all the bad debt recovered, everything will come in your P&L account. Okay, everything is recorded in the P&L account, but bad debt recovered, provisions, reserve are will not affect your debtors account. So bad debt recovered means that is income, so you have to credit it to the P&L account because that is your income. So now we have to prepare trading and profit and loss account and the balance sheet. So before that, we have to prepare three ledger accounts, that is debtor, creditor and cash. Then you have to prepare the opening statement of assets because the opening capital is not given. Then you have to move on to the trading account. So first we'll start with the cash account. Okay, draw the lines for cash account. And you start with the opening balance. You record all the entries. Okay, just now we passed the journal entry, right? You record this cash account. Then later we'll check whether it is correct or not. So record everything: the opening balance, the expenses, the closing balance. You have bad debt recovered, so you have to record that. Then the difference will be cash sale, or the credit side it is cash purchase or it is drawings. Okay, now we check your cash account. So to start with, opening balance, that is two balance brought down 3,400. Then cash received from debtor, that is two debtor 1,36,000. Two capital account, that is additional capital. Okay, that is additional capital, that is private dividend paid in. So the journal entry is cash account debit to capital 2,000. And the indirect expenses, then we had a drawings, so by drawings. Then cash paid to creditors, so by creditors. Bad debt recovered, the last adjustment number 3, so 200. Then we had a closing balance, the balancing figure will be sales, that is cash sale, because your credit is more, so that is cash sale. Total 1,56,200, and the difference will be 14,600. So this is your cash account. Okay, next we'll move on. Now before preparing debtors account, now you have to know why that cost of goods sold and the gross profit percentage is given. See here, your total sale in your debtors account, you have to record all the transactions that affect your debtors account. Means you have to record the credit sale also. Only when, if the necessary information is provided to calculate the credit sale, in that case only you have to calculate the credit sale, then you have to record it in the debtors account. Otherwise you just ignore the credit sale. In your problem they have given the cost of goods sold, means you can find out what is your total sale. When cost of goods sold and the gross profit is given, that is percentage, you can calculate what is your total sale, because the profit is on sale. So you can calculate the profit, you can calculate the sale. Now total sale means it is cash sale and credit sale. Here you come to know what is your cash sale. See here it is, your cash sale is 14,600. So if you find what is your total sale, then you can come to know what is your credit sale. So why credit sale is required? Because credit sale is recorded, or it is the transactions relating to debtors. Okay, I repeat. First, when the closing balance is given and the opening balance is not given, that is, I am talking about the debtor account. In that case, the balancing figure will be opening. In vice versa case, if the opening balance is given, the closing balance is not given, in that case, the balancing figure will be the closing balance. In both the cases, if you are in the position to find out what is the credit sale, then you have to calculate what is the credit sale. Only if the necessary information is provided to you. Okay, necessary information kottidre, you have to find the credit sale. So what is the necessary information? The necessary information, they have given the cost of goods sold and they have given the gross profit percentage. With these two information, you can find out what is the total sale. Okay, with these two information, you cannot ascertain the credit sale, but because of these two information, you can ascertain what is your total sale. From total sale, if you deduct cash sale, you will get credit sale, because total sale means it is the sum of cash sale and credit sale. ಅಂದ್ರೆ ಕ್ಯಾಶ್ ಸೇಲ್ ಮತ್ತೆ ಕ್ರೆಡಿಟ್ ಸೇಲ್ ಅನ್ನು ಆಡ್ ಮಾಡಿದ್ರೆ ಟೋಟಲ್ ಸೇಲ್. ಈಗ ನಿಮಗೆ ಟೋಟಲ್ ಸೇಲ್ ಎಷ್ಟು ಅಂತ ಗೊತ್ತಾಗಿ ನಿಮಗೆ ಕ್ಯಾಶ್ ಸೇಲ್ ಎಷ್ಟು ಅಂತ ನೀವು ಆಲ್ರೆಡಿ ಫೈಂಡ್ ಮಾಡಿ ಆಗಿದೆ. So you can find out what is the credit sale. Why credit sale is required? Because it is a part of debtors account. Okay, now we will just move on how to find out the total sale. Okay, you don't copy unless I instruct you. Till then you don't copy, so you don't take down this. Okay, don't write this. This is just for your explanation. Now this is how your trading account looks, right? You have opening stock, your purchases and the direct expenses and the gross profit on the debit side. You have sales, closing stock on the credit side. Now direct expense means all the expenses that will appear in your trading account. Okay, that are all direct expenses like wages or the carriage inward. It may be manufacturing expenses. If it is a trade expenses I explained you, right? Only trade expense, then it is a P&L item. Trade expense and other any expenses like general expense and sundry expense, then trade expense will be the trading item. So these are the direct expenses. Okay, so this is how the trading account looks. Now what is cost of goods sold? How you can find cost of goods sold? Why the cost of goods sold is calculated in the trading account? Because in the trading account you can see the sales, you can see the sales and closing stock. So this is the total units I manufactured. So for example, 1000 units I manufactured. So this is the total units I manufactured. Out of 1000 units, 800 units I will take it as a 600 units. 600 units I sold. So that is your sales. That is your sales. That is 600. Sorry, that is 600. The remaining will be closing stock. So you come to know the total production in your trading account. That's why the cost of goods sold you can calculate from the trading account, because cost of goods sold means the cost that you incur to manufacture and sell the goods. So the cost of manufacture you can come to know in the trading account. Now okay, now how to find the cost of goods sold? Okay, so this is how your trading account looks. Now sale means sold units, closing stock means unsold units. You manufactured 1000, you sold only 800, the remaining 200 will be the closing stock. Now what is the formula? Your formula, that is the first formula, cost of goods sold is equals to sales minus gross profit. You take down this, okay, you take down this point, you take down this formula. You don't copy it on this ledger account because you know this, right? Trading account how it looks. You just take down this cost of goods sold. Cost of goods sold is equals to sales minus gross profit. Sales minus gross profit. That is the first formula. So sales, you just observe here, sales minus gross profit. That is the first formula. What is the second formula? You just ignore this gross profit. You just remove this gross profit and sales. What is left with you? That is opening stock, purchases and direct expenses. You have to add these three things because all are expenses. You have to add. Then you have to deduct this closing stock because that is on the credit side. So the next formula will be opening stock plus purchases plus direct expenses minus closing stock. So copy down this. So take down both the formulas, this as well as this. So cost of goods sold is equals to sales minus gross profit, or cost of goods sold is equals to opening stock plus purchases plus direct expenses minus closing stock. Now we have to find what is the total sale. So we have to apply the formula number 1. Okay, this formula you have to apply this one, because in this formula you find the total sale. So now next you take down cost of goods sold is equals to sales minus gross profit. Cost of goods sold is equals to sales minus gross profit. So next you write sales is equals to cost of goods sold plus gross profit. I'm just interchanging the place. So I want sale. So this minus gross profit, I take this to the other side. I just take to the other side. It will become plus gross profit. So sale on the same side, cost of goods sold on the same side, minus gross profit you take to the other side, then that will become the plus gross profit. So sales is equals to cost of goods sold plus gross profit. Now you just write sales, cost and profit. Okay, to do the cross multiplication. So write sales, cost and profit. So that means sales is equals to cost plus profit. Okay, you don't write this, but you should know this equation. Sales is equals to cost plus profit. If you add profit to cost, you will get sales. So you write sales, cost, profit. Next you write, now my gross profit is 25% on sales. So I explained in the first semester itself, on what is always 100. ಯಾವುದರ ಮೇಲೆ, on what is always 100. You see the problem, it is on sales. So when your gross profit is 25, your sale will be 100 on what? Now what is cost? What was the equation? Sales is equals to cost plus profit, means cost plus profit will be sales, means 25. If you add something, that should be 100. So it is nothing but 100 minus 25. 100 minus 25. So it comes to 75. So sales, cost, profit 100, 75, 25. Next you write, I want what is total sale. Correct, I want what is total sale. So you put question mark. Then you write 1,05,300, that is the cost. Adjustment number 1. Additional information 1, that is the cost of goods sold, 1,05,300, that you write under cost column. So sale we don't know. Now you put the cross multiplication, that is 100 into 1,05,300 divided by 75, that is cross multiplication. Here you have to do cross multiplication. So next you write 1,05,300, that is cost, into 100 divided by 75. What you are multiplying to the question mark, that is always recorded at the denominator in the downward portion. That is in the denominator. So 1,05,300 into 100 by 75, 1,40,400. So this is your total sale value. So next you want what is your credit sale. So next you write sales is equals to cash plus credit sale. Sales is equals to cash plus credit sale. So substitute the values. Sales just now you got 1,40,400. Cash sale, you see the cash account, the balancing figure. Then you don't know credit sale. You just leave the credit sale in that place. Cash sale, you have to take it to the other side. So from 1,40,400, if you deduct cash sale, that is your credit sale. So credit sale will be 1,25,800. So 1,25,800, that is your credit sale. So next we will prepare debtors account. So now you draw the lines for debtors account. So now you complete the debtors account. You write opening balance and keep it as a nil because you don't know the opening balance. Then you record the other transactions that is affecting debtors account along with the credit sale. Okay, you have to pass the credit sale entry also. So I just give 1 minute. You do it fast. So to start with opening balance, that is two balance brought down. You don't know the opening balance. Then by cash account, that is debtor, the receipt from debtors. Then bad debt, that is the last adjustment. Then credit sale, just now we calculated what is credit sale. Then the closing value, that is 35,000. The total will be 1,71,400. The balancing figure will be the opening debtor value 45,600. So that is your debtor account. So remaining ledger account and the balance sheet we'll see in the next class. Okay, today I'll end till here. You just keep the practicing the calculate the credit sale once again. If you have any doubt, you just call me up. Okay, feel free to call me. Feel free because this is something tricky when we compare to the other problem. Okay, if you find it difficult, you can call me anytime. Okay, thank you.